Now we are moving to item 7 on the agenda, and I call on our CEO, Séan Murray, to present the CEO's report.
Thank you very much, John and Chair, and good evening, everyone. It's a pleasure to share the financial results of Comhar Linn I&TO Credit Union for the year with you all. We've had another fantastic year, and John has already highlighted some of our key achievements. What makes me especially proud and delighted that Carmel referenced it and John referenced it is not just the results themselves, but how we go about achieving them. At Comhar Linn, our culture is about carefully managing your money, providing a top-notch service and supporting our team's growth. One of our proudest moments during the year was earning the Great Place to Work certification. The recognition truly reflects our commitment to delivering excellent service through real people who care about our members. We were also thrilled to be honoured by District 7 at the recent I&TO President's Dinner for the positive impact which Comhar Linn has on its community, on our community. Our focus remains on conducting our business with professionalism, ensuring that you, our valued members, are always treated with empathy, warmth, and the highest of standards. Our membership continues to climb, with 1,424 new members last year, bringing our total membership to 29,581. Our team personally handled over 44,000 inquiries from members last year, and 26% of our membership borrows from the credit union, 4% use our current account, while another 2% utilise our budget account services. Consistently, over 84% of our members complete a transaction of some form or other with the credit union every 3 months. I think these indicators are a great sign of our relevance to members, and overall it has been a very busy but positive year, which feed into our financial results, which I'm going to cover next. The annual accounts are set out on pages 11 to 36 of the annual report, starting with the Director's report and continuing through the financial statements and notes. The income and expenditure account on page 18 shows that Comhar Linn had a record year, with total income exceeding 10 million for the first time ever. Our loan interest income increased by 10.3% to 6.7 million from sustained organic loan growth, and the rate of return remains steady at 6.2%. Investment income again improved as market conditions supported better returns on our portfolio. The investment income increased to 3.2 million, up 43% from last year, and the rate of return improved to 1.93%, up from 1.34% last year. As a result, total income grew by 18%. The expenses are summarised on page 18, and we go into significantly more detail on page 36. Total expenditure increased last year to 5.6 million, or by 8.7%. The cost increases are broadly in line with the increased volumes of transactions and lending in the credit union. Overall, our cost-to-income ratio continues to decline to 56%, one of the leading percentages in the credit union sector. While we see increased costs across the board, the percentage was below the corresponding increases in income. Employment costs increased by 18% to 2.3 million from 1.96 million last year, and the increase arose from some one-off costs during the year, salary increases to reflect the cost of living and maternity covers. Other management expenses increased by 7.6% to 2.95 million, which I will analyse on the next slide. And finally, credit costs reduced this year to 62,000, primarily due to the loan book quality remaining strong, resulting in a lower impairment charge. The quality of the loan book is another strength of Comhar Linn, and our members make so much effort to repay their loans. We take a prudent approach to our loan book, provisions and credit costs, all of which are outlined in more detail on notes 8, 9 and 19 on pages 29 and 32 of the annual report. Moving on to the other management expenses now, and they are 208,000 higher than they were last year at 2.96 million. These are all detailed on page 36 of the annual report. There are 4 major expense items which account for almost 2 million. Central bank levies are up to 620,000 and up by 25% in the last year. This is as a result of a significant increase in the DGS costs, so the deposit guarantee costs, last year from the central bank, which resulted in a much higher charge. Our loan protection insurance was 572,000, which is in line with the growth in loans and savings. Our IT spend increased again to 449,000 as we continue to invest in IT security and maintaining our infrastructure. Finally, our marketing was 259,000 with an increased focus on direct face-to-face marketing activities. And overall, we were very pleased with the level of growth in new members, loans, and the overall engagement in our credit union arising from these marketing activities. Other notable expenses that increased was travel and subsistence, which was €18,000 higher due to additional face-to-face marketing activity, plus some one-off expenses from previous years. And our training and education also increased significantly, up 47,000, arising from increased attendance at events during the past year, and also higher staff development costs and training costs as we further develop the team and meet the needs of the minimum competency requirements. These figures all result in a very healthy surplus for the credit union of 4.4 million, which is an increase of 1.1 million from last year. The surplus is driven largely by the strong loan growth and much more favourable investment returns. We would expect to see similar levels of surplus sustain over the coming years, allowing the credit union to continue to build our reserves and support our members with good dividends. While costs have increased, the cost-to-income ratio has declined again this year to 55%. And while our team represent the most significant expense, strategically that's what sets the credit union apart with our high standards of service levels, which require substantial resources. Salaries as a percentage of our overall costs remain consistent with previous years at approximately 41%. Overall, we anticipate the cost base to remain reasonably static in the coming year. Moving on to the balance sheet on page 20, our total assets now exceed 287 million as our members continue to be extremely loyal and fully use the credit union services. Lending is our primary business and our main strategic focus. We were delighted to see a 9% increase in the loan book to over 112 million last year. In total, almost 5,000 members borrowed nearly 50 million from the credit union. We try to look after all our members, from home improvements to new cars to helping members in more challenging financial situations. We make decisions in the best interests of our members, and we're always trying to help. The total investment portfolio reduced slightly in the last year as we funded growth in our loans. We continue to manage the investment portfolio prudently, with a preference for safe assets, overtaking any unnecessary risks to generate a return on the portfolio, all while retaining a strong liquidity position. A full breakdown of the deposits and of the fixed assets, a full breakdown of the deposits and investments and liquidity is in notes 6 and 7 on pages 28 and 29. Our other assets comprised of fixed assets, debtors, prepayments and accrued income, and these are explained in notes 10 and 11 on page 30. As I said, our loan to asset ratio indicates the effective utilisation of our member savings into personal loans, and this ratio has increased incrementally year on year to the 39.3% that it was at the end of September. The growth is even more impressive as it was achieved without providing mortgages. And unfortunately, not a lot has changed in the last year in relation to mortgages, and we are still very limited in our ability to lend for mortgages. As I explained last year, we believe in always offering sustainable products to our members, and we do not want to introduce a mortgage solution that we then have to withdraw in the near term. The rate of return on our loans was consistent at 6.2%, and our borrowers contribute significantly to the credit union's income. That's why our board are recommending a dividend to borrowers of 7.5% of the interest paid to reward their loyalty. And this decision will see the credit union paying out 450,000 to borrowers before Christmas. Investment returns were again positive, growing to almost 2% in the last year. There was a small increase in member savings, with total savings amounting to 238 million. The credit union is about allowing people to save, and we were delighted that on the 1st of July we were able to remove the savings cap that had been in place. We had monitored the situation very carefully and moved to remove the cap when conditions allow. All decisions have been made in the members' long-term best interests, and we thank the members for their cooperation with that. We know that savings are the core relationship with your credit union. Our members can opt to have money taken from their payroll each fortnight, which can go straight to their savings account or go directly to pay off the loan. This deduction at source is an easy way to save or keep on top of your repayments, and we thank the Department of Education and in the Payroll and Pensions Department particularly for their continued and vital support for the deduction at source. Notes 12, 13 and 14 on pages 30 and 31 show a more complete breakdown of these member funds. We also saw a slight drop in current account funds to 5.4 million at year end. Our members are using the current accounts, are very active members. And for example, those members tapped 13,000 times last November. The strength of the credit union is another critical and strategic priority for our board and management team. A strong capital position is the foundation for a successful credit union. While interrelated with holding an excellent common bond and offering relevant member services. We continue to solidify our balance sheet strength. We are generating a sustainable surplus to support the savings growth, paying members a dividend and enhancing our capital base. Our credit union is on a very sustainable growth path, and we've bolstered our capital in recent years. Indeed, our mission statement includes the priority to sustain a well-run business model, prioritising capital strength to protect the credit union for future generations. The credit union holds 42 million in reserves, and our capital ratio has strengthened by 14.7% to 14.7%. The movement in reserves is outlined on page 21 in note 18, and on page 32 provides further detail. The cash flow statement is on page 22, and our accounting policies are outlined on pages 23 to 27, with the notes to the financial statements following. I don't propose to go into more detail, but I'd be very happy to answer any questions at the end. Our goal in Comhar Linn is to provide a personal service supporting primary school teachers in Ireland in achieving financial well-being. As the teacher's financial ally, we combine our service levels with market-leading rates for borrowers, competitive fees for money management services, and also great rates for our savers. We want all our members to see Comhar Linn offering them the best value and knowing that great rates are supported by real people. But we need your support to sign up and encourage newly qualified teachers, students, family members, and anyone in your staff room who isn't a member to join, because together we're stronger. The strategic plan remains focused on enhancing our relevance to members, making sure your savings, loans, and money management needs are met, delivering exceptional service while maintaining an eye on the future. We will continue to prioritise investing in technology, embedding a culture of sustainability both financially and environmentally, while always staying true to our operating principles and unique identity. Looking ahead to next year, we are confident that our relevance and impact will continue to grow. Before I finish, can I acknowledge the tremendous support that Comhar Linn receives from the INTO through your President, Carmel Brown, General Secretary John Boyle, and all of the team in INTO head office and around the country. We also have huge support from the RTI, our friends in the teaching colleges, and all the members who helped spread the word about Comhar Linn. We are also very fortunate to have such a dedicated board oversight committee, and body of volunteers, who give up their time voluntarily to do a very professional governance job. Everybody plays a vital role, and I thank them on your behalf for their care and work ethic. I'm also very lucky to be part of a great team, and I thank all of them for their continued support. We appreciate that you lead busy lives, juggling family, careers, and other priorities. Please keep the feedback coming. It's lovely to hear how we help, what makes your life easier, and what else we can do to make managing your money as easy and as straightforward as possible. We care, and we derive no greater pleasure than helping our members and seeing you be successful in managing your money. Comhar Linn flourishes because of our mutual trust and strong relationship with members. I'm excited to continue building these relationships during 2024. Thank you for your continued support, and I look forward to another exciting year for Comhar Linn INTO Credit Union. I'm happy to propose the accounts to the meeting and answer any questions after the auditor. Thank you.
Thank you, Sean.